Okay, here we go. Welcome, folks. Today's the 18th of June, 10:54 a.m. Approximately 3 hours in front of the FOMC meeting, and we're going to go through the FOMC prep. And this is typically what I do on FOMC days. Really, the only reason to do this other than just getting a general review of what's going on and sort of being a little more plugged in while things are slow, which certainly could pick up if we drop under 33 here. Quite frankly, is most importantly, if you're going to trade the wildness of this Fed moves, just like the potential wildness of a jobs numbers release at 8:30 a.m. on a Friday, first Friday of the month, you absolutely have to be prepared for the volatility. Okay, volatility typically picks up tremendously. Now, whether that's going to be the case today, I don't know. So the most important thing is being prepped for it correctly. So really nothing more than preparation for a normal trading day, right? But the key is also to go through the charts of what took place over whatever course you're measuring back. In this case, it's going to be 2 years of each Fed day, okay? It's provided in a very simple format, just like you guys see right here on the screen, hopefully. It's a Fed day. And one of the awesome things about this website is you really can go back across all the way up to 20 plus years of Fed days to see what took place. So it's a practical way, albeit visual, to actually test or back test a current theory. So our FOMC trading piece, which we'll address as well as going through some of the numbers, this is our, and you know, I've actually been asked, I literally been asked by a bunch of firms to, bunch of introducing brokers, most recently Mirrors again, to actually do a webinar on this. And trading the FOMC can be quite tricky. But it can also be a monster day for it if you know what you're doing. Same to be said for the jobs numbers, obviously, but trading the FOMC, I love doing. Yes, there has been times in the past I've absolutely gotten my ass handed to me trading the FOMC. There's no question about it. One time I lost like 15 points. This was about 4 years ago. And it taught me an important lesson. And that was on about half size, so basically the trade completely sucked. Taught me an important lesson, as I'd even known back then, but quite frankly, I got a little bit lazy, as maybe hopefully we'll break under 33 here finally. Interesting to see, guys. Look at all the slingshots that have lined up, 1, 2, 3, 4, 5. Every single one of them have paid 2 points, so scalper's paradise here on the 5 range, second 31. Check this out. Just notice this. Now, obviously, this fourth one here, a little long in the tooth. Don't know that I would have been taking that slingshot, but as far as this scalper mode, look at that. Boom, boom, all the way to the low of the balance area. But my shorts are finally starting to pay off after almost a full 24 hours. In any case, let's get back to the matter at hand here. I'm going to try and take scales pretty heavy at 31 here from these 35, 50s, if I can get filled on them. So let me just go back here. This is a trade in the FOMC piece. Did this about 3 or 4 months ago. I don't think this is any big secret sauce that we have here. I mean, it's generally accepted. I think the key is how to execute very tactical strategy depending upon what goes on in terms of price action. This is absolutely where the footprint can shine. And if one understands how to read short into the very shortest time frame context, can be quite helpful. Now, the problem with this, and I guess a bunch of big disclaimers go out, that unless you truly understand how to read the footprint, you have in my opinion, a mastery of order flow, okay? This can be an absolutely wild day and may be very difficult to interpret based upon the speed of how these orders get executed, okay? So that's my huge disclaimer that goes out there, that, you know, if you're not prepared and you get your ass handed to you, you can't say I didn't already tell you so. So, you know, my goal is to have everybody prepped. It's part of the reason why I'm recording this. I'll actually put this up on the cloud as a training piece as well. because I don't think I've ever done anything like this before, but I had a lot of requests. To a lesser degree, okay, the same strategy that I talk about here will apply to the jobs numbers, right? Because the peekaboo, if you will, is typically your first indication, where a lot of people will come out and fade the first move. The best thing to do is to typically wait for a pullback and then get on the same trend, okay? So it's very easy. Do they all line up like this? No. But if you look over the last 10 years, you're actually going to see this as a fairly common theme that's shown itself about 70% of the time. And that's a pretty solid win rate as far as the pattern. Now, all we can talk about today is the pattern and not the specifics of, well, gee, Steve, how far does price move and when does it come back and all that. I can't answer all those. It's going to depend on order flow. All we're looking for is just a general tactical implementation of a very specific strategy of how to trade this, okay? So, with that being said, let's go into just a basic review, okay? Build upon what we've been talking about last week, which is actually a pretty good week for us in the room. All right, let's take a look at the composite. And yes, I did get the 31s off, so best on this right here. +1 and a half so far. So I'm starting to get some love on this finally. I guess this is the ultimate test of patience, as you guys often know, and the blogs I've written about taking these trades, especially if you're adding into these trades, patience can definitely play out. Kind of like up here, where I got short at 36, added at 40. You know, I rode this thing literally all the way. Took probably about 7 points of heat on 3 different ads and decided to turn it into a swing, and then it paid monster for me, right? But again, patience. Having to do a short position on in this pullback, ramp up, short squeeze, you know, barbecue of the shorts, whatever you want to call it, paradigm that we've been in the last 3 or 4 months is absolutely taken and patience, but it has paid, okay? Look at the change in the volume just in this bar that has dropped. So I'll sprinkle in a little bit of what's going on as far as the order flow. Again, power of the 5 P&F reversal. See the exhaustion? So we're close to getting 5 ticks of a reversal, which means we'll probably print another bar here in a second. But if we can't get that and we continue to move down, it's telling you a lot about the strength of the move, okay? You really want to be stepping in front of it. Well, I think somebody's just running stops in terms of algos, and maybe Crazy Horse is running wild today with hunting stops. No surprise they were underneath this level. We were very top heavy. You know, had they run them out, and now are the shorts showing their hand, and will we get blasted all the way back up to 36? Heck, anything can happen. Typically don't have this kind of volatility on dead days, though, but we have grinded and gotten very top heavy over the course of yesterday's afternoon into Globex. But let's just take a quick look at the composite, okay? So what do we know? We know that we had a big high volume breakout on that Thursday, right? This is what I would deem to be the David Tepper rally. You guys don't know who David Tepper is. One's one of the most successful hedge funds in the whole country, Appaloosa Management. The guy's been killing it. The last couple of years, he's gone from a couple $100 million in net worth to about $5 billion. So the guy just deserves to be a stud. But he basically opened his mouth, and the market was off to the races this Thursday. I made the mistake, in all fairness, late in the day, of taking a crack at it. Got a couple points off, and then it just came right back up and stopped me out. And that's how I knew that we probably had a little bit more to squeeze out for a possible reversal. And I was looking for an island reversal bar or some sort of hammer inverted to show up to possibly get us a reversal. It's a big reason I stayed short through the high that was made here. Now, keep in mind, this is the September contract. So there may have been some confusion on the numbers that led us from the June end contract into the U, but essentially the all-time high in this market's 47.50. So we printed the next day, came down, had a bit of a reversal, and then the other Thursday showed itself, and boom, we dropped. This 16 area, without a doubt, is absolutely a monster support. Could we see it today? It's possible. Will I buy the first zap down there? More than likely, okay? Depending upon what shows up on the footprint, how it looks, you know? We have no idea how it's going to look down there. It's going to depend upon a lot of stuff. But, I mean, I certainly want to see a flashy, crashy move into this area. Now, all bets are off if the Fed comes out with something that's, you know, some sort of real surprise to the market as far as whether I buy this area. But if we just get down and clear the queue, which we typically have a large tendency to do on these FOMC days, you know, I may more than likely take a crack at this, because this is it. I mean, this is the line in the sand. There's also an important signal here that was formed by other time frame players, okay? So we got the 16 area. So also on the high side, our biggest HVN and what I would consider to be the large line in the sand is up there at 39.50, okay? You can see these HVN lines. Why these things aren't extending out, I don't know. But I guess we can make it a little larger for the purposes of being able to see it. So HVN, LVN, again, just for a refresher, high volume node, low volume node, low volume nodes being red. Many times these areas of air pockets can act as an actual reversal, where we'd be looking at the high volume nodes to be our targets. Not to say it can't reverse and be the exact opposite of what I just said, but generally accepted principles of volume and why it's so important in terms of analysis, especially when you have a lot of volume, which we don't, is that you want to use it for areas of targets. In many cases, the volume that lines up on a composite chart, in this particular case, it's the September ESU contract, will, how should I put this? Will also line up with price action on these candles, okay? So very easy to see, obviously, the importance of the 16 area. You know, will we go down there at some point, today, tomorrow, next week? Will other time frame players likely defend the area? In my opinion, looking at currently what I see, the answer is yes. If they don't defend it on a first shot, you know, maybe something crazy said today by the Fed, it tells us a lot about all of this previous 2 weeks of price action. So we're always thinking ahead, and in terms of envisioning, what do we see? Was this move up on low volume? The answer there is yes. Do we read too much into it because it had a lot to do with rollover? It could have, sure. Were we outside of the Keltner channel? Yes, we were. I think that's important to recognize that we certainly were overbought. And going into this, you guys can see right here, we were what? 1, 2, 3, 3 days, 4 arguably, above the Keltner bands. And what else do I want to note here? Also, it shouldn't be mentioned, I'm not really drawing any micro composites out of this, right? Because I don't really have many days to trade on here, so why would we be drawing a micro composite? I was asked that question on Twitter this morning. I don't know if that person understands volume profiling. So, but here's the ATR. I don't know why it's not noted down here. So this is the volume here, and then this is the daily range. Okay, so you know, I guess average we could probably put in a moving average line, but you can see it's running somewhere around 10 points recently in terms of an average of this range. Yeah, maybe 10 to 13, 14 points. That doesn't really matter when it comes to Fed day, though, because you typically have a much broader range. So looking at the high point of this ATR on Fed days, you've had closer to a 30-point range. So it certainly can put, which hasn't happened recently. We'll look at the charts next. But over the course of today, it certainly could give us a shot both at the 1916 area and the certainly shot up at the 39.25 area. I don't see personally, but hey, what do I know? Anything can happen. I don't see personally any reason why the Fed would have a increase in quantitative easing. All I see is the potential for a decrease. And using reverse repo, you guys follow me on Twitter, actually posted, or I should say reposted a whole bunch of cool stories on that last couple of days if you want to read about reverse repos or any of the stuff that was rather surprising that came out of one analyst's mouth at a JP Morgan conference, them being one of the largest institutions on the planet, definitely one of the largest depositors in this country, if not top three, basically saying that the Fed's more than likely by the end of this year, first quarter, completely stop all asset purchase programs and look to retract or extract liquidity from the market via reverse repo. So thus putting pressure on sort of all this helicopters of cash that have been coming out of the Fed for the last number of years. So whether they hint that today, I doubt it. Anything certainly can go. I think the Fed certainly has enough room in my laughable credit markets experience as far as a trader that we certainly could take a hit in a reduction of QE, okay? I'm getting a little off track here, but just before I forget to put these thoughts on this recording. So here's where we are as far as the market. Notice, by the way, just while we're going through this here, just continued envisioning here, a 200 hook was actually a trade setup down here, guys. See that? Got down to about a 244 oversold, at least as far as the tighter ranges of the five range main chart here. So you can see how we made a new low on volume breakdown. Still hovering above positive, and yet the smoothing line took a bigger dip than the turbo line did. So that's actually an overbought indicator, plus new day low testing into underneath the area. There usually isn't crazy movements that are protracted on pre-Fed days. I mean, the market typically wants to peg to a certain area. So with that being said, that's the composite. Keep in mind these lines automatically come over onto my the 5-minute main. So we got a feel for where we are as far as the composite. Let's move now to day types. This is the day types chart. Something gets posted hopefully almost every night. The members only section along with the composite. Again, normal variation days. We've seen a huge number of more normal variation days recently. Haven't seen that many trend days. Okay, we have such a large amount of normal and normal variation neutral days that I think we're due for some more trend days. So all you really want to glean from these day types is to look what's been the pattern of days. Has it been a large amount, sort of a bigger statistical measure? The larger that is, the more there is a chance that there can be a different kind of day. Hence the review we want to do, and potential for a larger expansion in range. So normal variation, open auction in range. Okay, that's kind of what we're seeing, what we expected. Next we move to, where is it? We want to take a look at just the time-based profile now next. All right. Let's shift a couple charts around here. We'll make this the whole screen here. We're rallying back a little bit. Sorry, I just saw that. PSO stands for best scale out. All right, here is the last few months just in time. Okay, so what we're also looking for this, obviously the biggest area of all these areas is in the high 1800s. There's a whole bunch of very important support down there. So in looking at Fed days, the key thing, in my opinion, everybody's got varying degrees of opinions on this, is to look for the 3 strongest support and resistance levels around where we're trading. So you want to pick a far out one, and obviously it shouldn't be a surprise. My far out one's going to be way down here at 1893. We've actually got a bunch of singles here. We actually have a single here on the monthly chart. Okay, so arguably the highest time frame players stepped in, broke us through one of the biggest low volume noted areas of the last 3 months. Right, see the big air pocket here, can absolutely act as a magnet. Could certainly also act as support. So let's look to start building our hypos. Okay, so long hypos. We'll take a closer look at this on the dailies. We'll just scroll back. So 90, what is it, 90 1893 to 96. We'll say that's number 1. And number 2. The 1916 area. Notice with these hypos, these areas are about 3 to 4 points in range. We can't get them any finer than that. You have to trade a zone. When it gets down in there, then we make decisions about what we're going to do, if at all, based upon the order flow down there. Rejection, are we flashy, crashy type moves into those areas, which I far prefer. Big numbers on the tick spike charts, plus 800, minus 1,000, all that flashy, crashy stuff we like to see, and then a quick rejection and a possible retest. Many times with these areas, that first shot down, you get a quick bounce, and then many times you get a retest, which may go a little lower and run some more stops. And then if we spend some time balancing out down around there, what has been the mantra of this market for the last 4+ years, depending on time frames, to spend some time down there, suck enough shorten the whole folks in, showing their card, right? And then just go up and blast stop all day. Now, that's what's happened. Again, I don't know if that's going to happen today, but this is the monthly chart. So let's take a closer look at it by expanding it out. Each week, each day is represented by a different color. So you can see our value areas are 21 to 4350. That 4350 area puts us right up around the top of what I would consider to be our short hypo, number 1. Is the 4750. All-time high. Okay, that's our most extreme out. So we would label that number 1. Then drilling down into our short hypo number 2. Typing this in right. Yeah, short hypo number 2, putting us into the 39 to 42 range. We can fine-tune this as we drill down further into our prep, and oftentimes those numbers can be slightly adjusted, but I just like to give general ranges so you have a feel for it. So that's where the value area high is. Notice that the value area low is it's 4 points higher, right, from a time perspective only. It's 4 points higher than the big 16 area. So let's do this. Preferences, we're going to add the let's add the point of control from the volume standpoint. Let's represent that with the round brackets as we typically do. Okay. Now, notice the different stories told so far looking at the value areas from a volume perspective. Okay. So we want to look at both time and price in terms of helping us put the best frame of understanding around what's going on in this auctioning process so far this month. So the value area from a volume perspective tells a little different story. 950 to 3550. Okay. Now you notice I don't have a POC labeled there. I should probably add that in, shouldn't I? So let's put the POC in. Let's keep that the same brown color. All right, cool. So look at that. Look what the POC of this entire month is telling us. It's also adding confirmation to that 16 area, 1450. This is actually cool shit. I haven't seen this before. I didn't have these lines put on the chart, but so be it. So 1450, adding strength to our 16 area, hypo number 2 long. All right, so what else can we glean from this information? Sometimes I'll take the composite and I'll drop it in here next. Just compare them. It maybe helps you pick up on something else, you know? I mean, this is an area where you can have paralysis by analysis, in my opinion. What you can't do, though, is to mess around with all that stuff. I mean, obviously not today, but in a normal trading day, market acting in a normal fashion, you can't be constantly going back and forth. It's the stuff you have to have done before. And I choose to do when the market's dead, pre-Fed. That way it's super fresh. It's, you know, hopefully helps us pick up on some points. Because the last thing you want to do is, now that you have hopefully this burned image into your brain of where all these areas are, you got to write it down or print it off. You want to look next to what happened over each Fed day, so you can gauge ranges, and then we'll go into specifically the pattern last. Okay, I think this is the best way, in my opinion, to absorb this. But you guys are welcome to watch this multiple times if you want. So what can we see also? There we go. So right inside our 93 to 96 range, we also have a 50-day moving average. Haven't touched it in a while. This 50-day is, if you want to get super technical, this is an exponential. Just take a look at the simple line, see if it's in the same place. It's lower. Okay. It's actually lower by almost a full 10 points, so keep that in mind too. I prefer the exponential, but if we just take a look at a weighted, that's actually up closer to 1900. So just keep that in mind, the 3 different 50s out there. What else? Triangles, right? Definitely a decent triangle on this daily picture as far as potential coiling right up into Fed. Not a surprise, something they typically try and do, peg it, and then let it rip and go wild. All right. So here's the question one needs to ask then before we move into the dailies, is that do we want to drill down and do any more detailed hypos? And the answer to that question, I'm going to move to the daily analysis of the profile. Okay, so this is what I'll do. You can even get rid of the Globex session if you want. Actually, you know what? Let's do that. Let's get rid of the Globex session. Just gets rid of the noise that's in here. Do I really want to do that? Tell you what, let me keep the Globex in for now. We'll just ignore it. So I'll grab the pen because there's going to be probably some more specialized notations we want to make on what's going on. So we see the importance of the 16 area, right? Okay, just on Thursday sell-off, and since then, our slow grind back up. We also see the importance of this 43 to 39 area. I mean, don't fool yourself, guys. There are a lot of stops in these areas, okay? And that's why you have to use these areas range. More than likely, if we move down a little bit and try and bounce today, and then move down and try and bounce, I don't know what the pattern's going to be. You know, and then we blast down into this area. I mean, I would be willing to bet heavily, depending upon how that order flow looks, this is going to be defended. But in order for it to be defended, you have to get out and clear the queue, right, to clean out all the stops. Notice also down there's a weekly F1 there, 1550 area. So there's just a bunch of stuff down in this 16 area range. Okay, so we got the upper range. These are two hypos, hypo number 2s. I don't really know. With that ATR and these ranges that I'm more going to see in these charts, I don't really know that I want to drill into a hypo 3. You know, I mean, it certainly could be completely dead and maybe go up past 38, you know, yesterday's high. I mean, I certainly think that the, let me just expand this out so you can see this for purposes of recording. I have kept the lines on the chart because I think they'll be relevant today, and especially when things are moving fast, you need to see these lines in multiple charts so you can catch them quick, if in fact there's any kind of setup. So yesterday's low at 24, right in here. Technically, this can be a hypo 3 long. It has certainly a much higher chance of happening. So, you know, let that be the case as far as here. Okay, hypo 3. One of these days I'll learn how to spell hypo. All right, so hypo number 3, this would be a long. Do that 2-day low. Keep in mind that yesterday's low minus 2.5, right at 22. So that's going to be our range down there. To the upside, that's it. We have them. Only 2 hypos, guys. Breaking out into new highs with all kinds of volume going on, all bets are off. If we don't, we got nothing up there. That's it. I mean, other than Bollinger Bands and, you know, expanded Keltner channels and, you know, other types of stretched measures of standard deviation variance, we don't really have anything up there. So, you know, all bets are off. You guys know I absolutely hate trading new highs. Hate it. There's nothing to go on. It's just a wild kingdom. He has nothing but order flow. And, you know, hey, that's great if you got it mastered, but, you know, order flow in new high territory is using tons riddled with ambiguity. I mean, other than a sell sign and bounce, which is pretty straightforward, that's it. So you're going to want to see much, much harder and steadfast rules, as I've gone through multiple times in trainings and webinars. You're going to absolutely want to see a number of shots up at the top. You're going to want to see at least 7-to-1 sell side imbalances. You're going to want to see black boxes capping the tops of these bars. These are all the things you're going to want to see up here in order for me to take a shot at any kind of new high today as a short, right? That's not a hypo. That's just an on the flyer. I'm getting no more love off these shorts. All right, so what else? Let's take a little further look back, actually, at the profile here. See if we can glean anything from our nuttiness gap up into this range. If your chart only has a couple of days back, just expand out the days to look back. Take it like 30. There we go. All right, so we're bored on what happened. We got a good idea there. Let's take a look at the gap up out of the 1900 area, see if we can take anything from that. I'm actually going to remove the lines from this chart so we can see the single. Always important when you're on analysis looking back. Okay, so here's the big one that I don't think was filled. Okay, it, by just technical market profile textbook definitions, more than 6 ticks came against the single. But it was a quick rejection. And notice this was an open auction out of range, but it was also a rejection reverse. Okay, see that? Very powerful in market profile auction land. Being able to recognize this early would have kept you off the trades. Okay, you know, I took 2 trades on this day, and both of them were stupid trades, and they wound up panning out, but it took a number of days. Only because I just thought this David Pepper rally was just complete bullshit, and was just facilitated by financial media, all those idiots on CNBC. So anyway, the rejection reverse, this came on some of the comments here, and then it was just a barbecue shorts day. But we still have an active single here, in my opinion, all right? Active. Looking back further, just a very tight balancing area. Note also, as far as our 16 area hypo 1, look at all the value area highs that correspond with that too. Big, big stuff here, guys. Lots of crap lining up at 16. I'm not continuing to build, you know, lots of false confidence in this. I just want you guys to understand this is an important area. Breaking it also means a lot too. So there's arguably a lot of new money in up here into this market. Most of it's probably very late to the game retail folks that are usually, I should say, late to the institutional, and I think a lot of fund managers are pretty concerned right now about cash levels. So I mean, a lot of these guys are fully invested and probably nervous about it. But by prospectus, a lot of these mutual funds have to be, at least in equity land, have to be invested. So at least for my old firm, Fidelity Investments, many of FMR, our parent corps, prospectuses, whether it be Magellan, Contra Fund, Small Cap, you know, any of the bigger funds out there, the Growth Fund, had to be at least anywhere between about 86 to 92% invested in equities, right? So as you can see, some of these other time frame players have come in at some of these big areas once, you know, sort of the coast has been clear, or all news has been out of the way, if you will. Albeit this Iraq situation is concerning, it has had much more of a profound effect on the price of oil than it has on any of these markets. So, but that doesn't mean that it can't have an effect on it if things get worse. The market doesn't like uncertainty, so hence the craziness surrounding, comments that the Fed made that surprised the market right after FOMC release. Also keep in mind that the dog and pony show Yellen press conference is going to be a half an hour later. She has been much more forthright and honest. In all fairness, that's been cool. As far as a lot of these Fed governors, it is an Alan Greenspan speech where it took algos just to figure out what the hell he was saying. So, we're looking at the just a profile here. I think 1907 is coming in maybe as a hypo 2A. So you can see how we have an active single from the 29th morning trade into it being a support area. So maybe make a note of that as sort of an additional area if we get past hypo 1, maybe like a 1A, 2A type in this area. Got a couple of naked POCs. Actually, you know what? Let me just take a look at that too. I failed to take a look at our bigger NPOCs below. Always important from both a time and volume standpoint. A lot of those show up as high and low volume nodes, but just as a point of reference here. Remember, in order to spot, at least on my profile chart, in order to be able to spot these naked points of control or these prominent POCs below us, you have to extrapolate just in your mind here. You have to remove these Globex sessions. So when you're looking at this, you always want to just make a note for some of the newer folks that may be watching this. You always want to remove these Globex profiles when you're looking for prominent POCs from either a time or volume perspective, and just look to see what's being extended. So, not really seeing anything here of relevance that's naked. So let's drop back out of this and go backwards. Red lines extend out for both time and volume-based POCs, red being time, but you have to look back to see what they correspond to. Okay, so 1905, if this is looking right, is our big both time and volume POC. So again, adding a little more to our 07 1A hypo argument, right? This came on the morning of the 29th. Oh, so we also formed a single there at the top of that range, which is still active. So that single, coupled with this, is giving us a 3-point zone right here. So I'm actually going to note this, and this is the beauty of doing research. You may not have been paying attention to these areas. Sometimes I don't. But the more you take a look back at this stuff, the more it begins to come into focus. So, hypo number 1A, long in the 450 to 750 area. And it's always hard from the perspective of putting, which I like to assign a rank of importance to these hypos, one being the most extreme out, which should be traded given all the right stuff lining up for it. 2, 3, and any subsets thereof, maybe traded with a little less fervor, a little less size. But I mean, everything is risk management in this business, so assigning the sizes to these areas of some sort of relative risk versus reward is what we look to do when we're trading these areas in client accounts, whether it be through the ES in our master controller account at RJ O'Brien or Dorman, or any of the other associated accounts. So my partner Tony is going to be on the desk here in about an hour, and hopefully he'll be ripping some good trades off. All right, so I should force him to watch this video here, which I'm probably going to do. All right, so let's wrap this up. We got our hypos. composite. Let's take a quick peek at the intraday 15 minutes, see if there's anything we're missing there. This is a little more short-term stuff, but we'll take a quick look at it here. I'd like to see a nice flush in the FOMC, something we haven't seen recently. One cool thing I love about this chart is it needs to be a little updated, but once it gets updated, this thing is just monster research for it on big moves. So all the way back into the end of the year, key L and HVNs, key move for previous micro composites, all the research is in here. It's done, the zones, the big areas. So if we start moving out, getting into some of these other areas, this becomes a very helpful chart for long-term research. So we'll be keeping close tabs on our 6 volume breakdown charts today, our 2500 volume. I'll be back and forth between the 2500 and the 1500 on this chart, just typically out of the view there. All right, so let's go into the strategy. We've got our broad idea, and let's go into the strategy here. So here's the strategy. Let me see if I can expand this out a little bit here, maybe you can see. There we go. Okay, so 8 times a year when the Federal Reserve meets us at key interest rates, I don't bore you guys with this stuff. I'll must make decisions on whether to increase it. 2 p.m. Eastern. Okay. So let's just go through this in terms of the text, and then I'll show you on the chart. So after the initial reaction, what's called wave A, okay, there is a retracement of this move, so wave B, okay. So hard to see. I wish I could expand this out, but essentially, you're coming off of the initial reaction, wave A down, right? There is, in a couple of cases, a varying degree of retracement. You could even categorize it as an ABC type retracement. Point is that you want to get towards a finite area. So, you're going to use all of those previous levels to try and ascertain, is A finished, okay? Was there some sort of retracement of A to form BCD, which we ideally want to see, and then D being the big trend that moves. We've seen this time and time again, so, maybe put this in your head if you can, and we'll try and draw on some of the days that we looked at to see if we can identify where ABCD was. This doesn't have to be ABCD. It could be A, and then B is the move. Or, I'm sorry, B is the retrace, and then C is the move. More than likely, there's going to be some further continuation, or I should say completion of an ABC. But essentially, after the initial reaction, there's a retracement of the move, wave B, which takes the market at least halfway back. That is key, okay? Even though this is a fake move, that halfway back, or those intraday fibs, are the levels, obviously, at that area is a good place to look. So we'll actually drop the intraday Fibonacci lines on there so we can just measure that. But it's easy to see on the footprint, or not on the footprint, but on the market profile chart, because it has a center point, midpoint line. We could even, to a lesser degree, use the VWAP from a volume perspective as a sort of secondary indicator for that as well. And if this seems kind of confusing, it'll come to you after you see this a couple of times. But that's the fake move. So we could see, a first small reaction, then wave C back down. Typically, again, you want it to go about halfway to retrace that. That's kind of a shake move, right? And then really when the pattern's completed at D, which ideally is retraced, I don't know, 61.8% of the first A wave move, right? Which is almost the case in the chart you can see here. it's retraced about, it almost looks like a perfect 61.8, and then it just ripped lower. Okay. Once this initial move takes place, there usually is some sort of balancing after it. I don't know if that's going to be the case again today. We'll look back, so forth. But you know, you really want to enter when you think D reaches its very early stage. You know, whether there's POCs, ATNs there. You know, you can see where I kind of break it down here. So it says enter the market when EF reaches the cluster of point D, AD equals CD, and then VWAP, POCHN with a 3-point stop and an open target. Now, the key with this is that this is normally what happens, okay? If we have lots of crazy whippiness after this, and you keep in mind, this is, look on this particular chart, this is a 1600 tick that it's being measured on. I don't really trade on a 1600 tick chart, but for the purposes of just illustrating the pattern in general, I like this one best. So it AB is the false move, XA is the first reactionary, and then DC is the shake or fake out, and then the D is trade execution. That makes sense? Let me know if you guys have any questions on this, and you can certainly send me an email or what have you. If you're not clear on this, I would probably make sure you watch this at least a couple of times, or read this just a bunch. Read it, look at the pattern back and forth, so eventually you'll get it. It's not that difficult. The problem is when things are going live, crazy, is being able to put this into action. And that's the tactical implementation part of our strategy here. And that's going to involve, obviously, all the other things we utilize to trade, including order flow. So, but just to finish up here, so what follows is a big move in the same direction as the initial move wave A. So close half your positions once you've made 3 points on the trade, bring your stop to break even, and then use a trailing stop for the remaining half. Now, the trailing stop, unless you understand how to do that, I would not mess with it. Keep it at break even, right? So you get 3 points in, it's a whippy day, makes sense to keep it at break even. If you really want to not get shooken out of the trade by an even break stop, put it 3 ticks above that price, okay? Especially if there's some other line in the sand or something else that shows in the direction of you know, the top of the D or our potential D entry point. Okay. All right. So that's the strategy. Let me close this down. Let's take a look at FOMC days in the past. All right. So again, we want to assign our. Let me just grab. All right, so AB we want to look to the 1400 time slot. It's usually easy to see on these charts where the volatility increases here for this. Let me just grab the pen here. This is the most recent Fed day as well. So our initial move here, we had a shakeout. This looks like it was probably about a little more than a 50% retrace. So looked like it was an area of support. So this was really the area to take along here. Not really much to glean from that. And we had so here's the 319, and again, this is actually a wild day. Pretty good stuff. Initial move, right? Retrace. Notice this one wasn't perfect, but it was lining up with a nice trend line. So if you're able to recognize that, this pullback here was your only shot. More than likely, this lined up as a slingshot too, I've got to believe. So we'll be on high alert for a particular trend if it's established trend, which in this case has obviously been up the last 2 days, but slightly up to bouncing since last Thursday. We're going to be, looking for a trend channel draw, which I'll do last. So this one getting it on, but nice. I mean, this is a nice drop on. Looks like in this particular case, especially since this was new to the press conference coming out in the FAQ section that usually starts around 2:30. Looks like something was definitely said here to put us down. So on high alert for that. Let's switch to next day. Okay, so this is actually pretty good right here. This is actually closer to the pattern, much closer. We had our first move, and we had a retrace. This would be a little more than a 61.8. This is the area to get on that. My phone's ringing. Bear with me a second here, guys. Okay, so just looking at this pattern is actually very similar to our strategy that we were talking about. They had the first shot down, reaction back, and whether this was a slingshot, I don't know. I doubt it. Probably was on a higher time frame. But keep in mind, we're looking at a 5-minute chart, so in its most simplistic form, we look at these patterns. So, but I do like this, and you had a pretty decent move, over 10 points off that particular strategy, so that was good. Let's flip to the next one. Okay, so in this particular case, that strategy didn't work at all, because we just dropped down, obviously not knowing what was going on. The 1760, we ripped up from that point forward. And it just kind of got choppy for that the rest of the day. Let's take a look back. Nice move off this. Keep in mind, a lot of these dates back. The Fed has, in this particular day, we had I remember this. This was actually a pretty big surprise for a lot of us. Because if I'm not mistaken, didn't the Fed, this was one of the first meetings where the Fed actually curtailed asset purchases. So maybe they warned thereof. First part. So let's go back and take a look at the end of July. Okay, so move off, down, bounce up, and at this point, I actually recall this trade. We actually took this short, and this is not a normal pattern that you see, but we were taking a crack at the 1700 area, and arguably we had to be pretty early. But at the time, 1694 was the top of the move, pretty serious, kind of like the high here at 4750. So this is an example of taking a trade similar to our short hypo number one, that extreme out area of the all-time high here. It went up, cleared the Q all the way to the all-time high and then dropped. Let's take a look further back. Okay, so even though this is a choppy pattern, the initial reaction, and then without getting too detailed, there's a retrace of it. There wasn't even really a shakeout in this. There was a retrace of it, almost back to the scene of the crime, 78 retrace area, which you want to be always on high alert for, you know, a move back to the scene of the crime, pushed away again from that, came back up, and this is what looked like to be lower price action, lower highs, and then the real move took place. So reaction, get short, boom, got paid. This is actually a slingshot pullback. Could have taken this again and gotten paid. So this would have been a real home run day for our strategy and or our slingshot in this move. I mean, just beautiful off that trend line right there. And I go back to the 1st of May last year. Not a lot to be said, but I mean, you know, again, strategy playing out. Initial move, right? Retrace back to it, and then boom. So just pattern repetition here. It's showing itself a lot in these moves. Again, same thing. Initial burst higher. We faded the move. We came back down, retraced to, I don't know, 50%, 61.8, something like that, and then moved up again. So getting long down here. Got you about 3 points. End of January 2013. Not really much to be gathered here. Notice the tight range that we were in. Looks like we just had a quick move and then just a slow continuation of the pattern. Not much to be had there. Take a look at the end of 2012. Interesting that you saw a pretty big ramp after lunchtime, huh? About 7.5 point ramp into the Fed numbers, and then just maybe got a little top heavy here and then sold off. So we'll certainly be on alert for that today, because, you know, between the grind up since last Thursday's big sell off, trend day down, and our move back up, we're definitely getting top heavy here. Let's take a look back. Okay, so again, first move, and notice that this one, not necessarily an AB equals CD pattern, but right along the line. So I mean, you always, it looks like in almost every example that we've looked at, with the exception of maybe 2 or 3, there's been a burst, and you really shouldn't have gotten on that burst, but the retrace back up against the top has really been your opportunity to let it play out and to get on the trend, if the trend's even going to develop. The trend was down on the like a 60-minute or even a higher time frame chart here, and then we pop back up. Got a pretty decent move off that, about 8 points on that trade. Certainly worth it. Better than a sharp stick in the eye, going all the way back to 2012. So here's the release. Not really much took place that day. Here's 8/1/2012. Okay, so look at this. Another example. Boom. Waited for the retrace, almost all the way back to the scene of the crime. Got paid about 5 points. Take a look at 6. Boom. No real retrace here. Maybe about a 38 retrace if that. And then the trend continued down. So probably a good day where, again, slingshots in a little trend down move we had here. Slingshot retraces, provided they had other areas of confluence showing up on them, pretty good. Okay, so here's 4/25/2012. So big reactionary move up, retraced almost all the way to the scene of the crime, and then our pattern played out for about 5 points. So not bad. Little trend channel, lower trend channel here could have been drawn. Maybe even another slingshot that would have shown up here, possibly get on that trend. Keep in mind, we're just looking broadly at these patterns, just trying to glean some sort of consistency from them. This is one of the rare exceptions where there really will be nothing to be had, unless you just got long for the hell of it. So here's back to 2012, January. A little bit of a pop up off that, and then reactionary move. Much to be said there. So you can see how the power of these slingshots, this is another example of that, get a pretty good move down, arguably 5-point retrace right against that channel. Bang, that was your trade. In this particular case, this trade would have gotten almost 15 points. So always want to be on the lookout for those slingshot pullbacks in trend. Okay, trend can be identifiable down to something as small as 3 to 5 minutes, in my opinion. Going down and looking for a trend in a 1 minute is too short of a time frame. Here's back to November 2011. This is not really an ABC or an AB equals CD pattern. It's kind of crappy. Had a little triangle form though. Notice that kind of compressed and lifted off. Now here's an ABCD. Look at this. Awesome. Boom. First reaction. Came back up. Hammer reversal candle on the 5-minute, right? Probably quick rejection. And look at the volume increase on the drop. Beautiful. Textbook trading. Love it. Hope that happens today. So right now it's 12:10 lunchtime here in New York. I'm going to end this unless you guys have any questions. Certainly feel free to ask the questions. I'm just going to stop the recording right now here. I am Steve Federal.